Hi, my name is Alex Carlucci, and I'm going to talk to you about rates. I'm with Gustan Associates. So rates this year look like they're going to stay steady or even drift a little lower due to all the tariff talk and maybe a possible no inflation in the economy and President Trump wanting to keep the economy rolling instead of letting it get to that point where it's going to stall. Even though it seems like it's on really good legs right now, I think they want to keep it that way. It's when the housing market's rocking, the whole economy's doing well, and the only risk to keep the market heated up like that is inflation. We're not seeing that, so we're not going to see probably rates move this year unless you start to see inflation pick up, and that's what like a CPI or PPI numbers on economic. If you want to watch the news, the CPI starts getting higher. That's Consumer Price Index. It means if we're paying more per goods, that's a CPI, or the PPI, that means the producers are paying more for their goods, the people who make the stuff. So if you see those numbers get hotter, that means that the cost of things are getting too hot, and that's when the Fed would come in and raise the rates to stop that. So there's been low rates for a long time, and that inflation has stayed low, so there's something in our economy that's keeping inflation down. I think it's probably the collapse of 2008. Even low rates can't heat up the economy. It's good I think it's good that rates are being kept low this year. Why not? Let people go out and buy houses. Why stop a good thing? When they started to raise rates last year, it really put a halt to the housing market. Refinances were done. Mortgage brokers who did refinances weren't doing a thing. Purchases were starting to slow down. Prices of homes were stalling, because the lower the rates are, the higher the purchase price can be, because more people qualify. So low rates are good for the economy. It's good for you and me. And the only reason the Fed wants to stop that is if things are getting out of control. Because if it does get out of control, it's not good for you and me. If you're starting to pay $100,000 for a $20,000 car, that's inflation. You don't want too much inflation. So we want to keep a nice steady balance of inflation. And that's why rates are going to stay low. And that's why it's a good time to refinance now. Rates are really good. They're almost a point better than they were last year or the last couple of years. So it's a great time to refinance for you guys, especially people in the non-QM loans. The non-QM loans are these high interest rate loans that you got into because maybe you had a foreclosure 2.5 years ago and you couldn't go FHA. Well, now it's the 3-year period, and now FHA will do your loan, refinance out of that high interest rate loan. So this is a great time to refinance. I highly recommend it, especially you guys are the non-QM people that got into those loans at the high rates. You guys can save 3 or 4 points possibly. But if you could save 3/4 of a point on a refinance, I recommend it all day long. If you just got your mortgage, even a 1/2 a point's worth it. If you've had your mortgage for a couple of years, maybe a 1/2 a point's not enough. Maybe 3/4 is what you should be looking for. And right now, anybody bought a house in the last 3 years can probably save a point. Rates got so much better, so give us a call. You can call me directly at 630-915-7550. Or go to gustanshow.com and look at more of these videos, or read some more blogs, and that's GUSTANCHO.com. Thank you very much.